Hello, everyone. It's Clark Alexander again with Pure Funding. Welcome to another episode of Pure Perspective. I'm here with Willis Richardson. Willis is the co-founder of Pure Funding. He is based in Weatherford, Texas, where our headquarters is. How you doing, Willis?
I'm doing good. How are you doing?
I'm
How's
good.
California? Is it cold?
California is a bit brisk. We are heading up to Tahoe this weekend, and I'm not sure if we're going to be able to get back. But there's no better place to be snowed in.
No. What side?
We're going up into the north side, North Shore, so
Okay.
it'll
Yeah.
should be a
Sorry.
snowy trip for the kids. They're going to be fired up.
Argy, or what's the town up there on the north side?
Truckee,
Truckee.
yeah,
Truckee.
yeah,
Yep.
yeah.
So then
So
North Stars up there. Are y'all skiing
North
there? Or
Stars.
where are you?
No, we're at Palisades, which is the old
Okay.
Squaw Valley. Yeah,
Yeah.
it should be fun. So
I
today we
fell
are
there
going.
one time.
Oh
I
yeah,
fell there one time and skiing at Squaw Valley is the reason I wear a helmet nowadays.
yeah.
We were back in one of the bowls and it was icy and I fell and slid on my face for about 100 yards and
Yeah.
had road rash all the way
Oh
down.
no.
And my dad was like, "Okay, we're gonna go get you a helmet now."
Yeah.
And I was like, "Okay, I'll wear it." So I love
Never
that place.
once. I'm embarrassed to say, growing up, and a helmet never touched this head. It's
No,
pretty crazy
it
what we did
shows.
back then. Yeah,
It shows.
yeah.
Well,
Some would say I have it on.
I was 22, so I skied for 15, 16 years without a helmet
Yeah,
until then.
yeah.
So
Crazy what we pulled off.
nowadays, yeah, I know. We're still alive though.
We're still alive. We're still alive. And today we're going to talk about investor products. So,
Yep.
while the market is obviously impacting your traditional, purchase and refinance business, investors are still doing what investors do. They invest. And we wanted to just talk about some of the products that we have available and how those differ. And kind of what the benefits are and like what kind of the market tendencies tend to do for these products, how they impact rates, what were some of the products like when rates were low. I know
Mhm.
you could do conventional stuff back then.
Mhm.
Why don't we start with kind of what are the typical products we see our investor customers taking advantage of?
So right now, the two primary loans that we see people taking advantage of for investment products is a DSCR loan, which is short for debt service coverage ratio loan,
Mm-hmm.
and a fix and flip loan. So debt
Okay.
service coverage ratio, those kind of loans, we don't look at your income. We look at a reserve requirement, and that can be anywhere from 3 to 9 months, depending on the product that we're going with. And then um, we look at the ability of the property to cash flow. So we
Mm-hmm.
look at principal, interest, taxes, and homeowners insurance, and then we look and see if the projected rent for that property is going to be higher. So you can't do a traditional pre-approval on one of those loans because so much weight is based on the appraisal. Because the appraiser is going to go out there, he's going to appraise the value of the home and appraise the potential rent schedule with
Okay.
other properties in the area. So if your principal, interest, taxes, and homeowners insurance come in at $1,500 and the rent is higher than projected rent is higher than 1,500, then you're approved as long as you have the 9 months reserves or 3 months reserves or 6 months reserves, whichever product. So as far as documentation on approval on these, it's very simple. Up front, all we need is your driver's license and 2 months bank statements showing cash to close and the reserve requirements. And as long as
Okay.
you have that, it's a great program, super easy to underwrite. We can close them actually pretty quickly. Um, the Sometimes there might be some additional documents you need to get. You need to have insurance and things like
Yep.
that. But up front, real simple documentation. And if you're somebody that has more than 10 rental properties, this is the only kind of loan to continue buying rental properties.
Okay.
There's a couple others out there, but it's the primary vehicle because you can't conventionally there's limitations. You can only have up to 10 homes conventionally financed. So this is the next step if you're trying to grow past that. The other program is our fix and flip program, and that's for somebody that's not buying necessarily to um, turn it into a rental. They're buying a home that has issues. They're fixing it up and then they're turning around and listing it. And that also is a loan that doesn't look at your income. It doesn't look at your assets, and it's a soft credit pool. So
Okay.
how that loan works and where the lender is protected is the whole loan has to stay under 75% of your after renovated value. So if the home will appraise for 400,000 once all the renovations are done, the
Hmm.
whole loan has to stay under 300,000. But in that 300,000, you only have to put as little as 10% down, and then you can get 100% of your renovation budget up to 50% of the purchase price as long as the whole loan's under that 75,000.
Got it.
And super super affordable, great way to do these kind of loans is doing a fix and flip, because it allows you to keep your cash in your pocket. Majority of people that do fix and flips, they're having to buy the house and then they're having to fund all the renovations, and then they're out that money until they close on the house. By going with this loan, you're out of pocket as little as 10% down, depending on how the numbers work, and then you're getting you're doing draw schedules to reimburse yourself after you pay for the renovations, and you can do as many
Got it.
draws as you want to. um, we prefer to advise doing 3 or 4 draws, not 60 draws, because there is a fee for each one of those draws. But typically somebody needs on their soft credit pool needs to have a credit score over 700. That's not a
Okay.
hard and fast rule, but they're looking at all your trade line items along with this property and the new property and everything else. But it isn't a hard credit pool. Those loans do have to close in an LLC, and they're a 12, 18, or 24-month interest only loan that you have to set up and determine how long you're going to have the loan before we close the process. So, but it's a great loan for trying to develop real estate. If you're trying to invest in real estate, it's a great place to start.
And you don't have a bunch of cash sitting around. You need to leverage the cash available in the property to get it going. And then
Mhm.
on the DSCR side, when you hear the term ratio,
Mhm.
is that referring to the rental income compared to the principal and interest, or the principal,
Yep.
interest, taxes, insurance? Is that included
Yep.
as well?
Yep. So we call it PITI.
Okay.
Um, and if there's HOA,
Yeah.
also HOA. So the we're not looking at the cost of owning it and maintenance and things like that. We're just looking to see if your rent is going to be higher than the debt that is on that property. So we look at a 1.0 ratio with most of our products. Now, some of the other products where you have a lower um, threshold for your reserve requirement, like a loan that has a 3-month reserve requirement might have to have a 1.25%
Got it.
ratio. If you go with the 9-month ratio, it's 1.0. So if it's renting for 15,000 and the PITI is 15,000, then you're approved.
Got it.
So it's has a little bit more freedom, allows you to get a little bit more money going to it and be approved a little bit easier. Because the minimum down payment's 20,000, but if your ratio's off, you might have to put 25 or 30,000 or 25 or 30% down
To make up for the
so that
deficit.
to make up the difference, so that it's you have a positive ratio. So
And we have a
yeah.
number of lenders that offer these products. So we're, as a
Mhm.
reminder to everybody, we're a broker. So we have a number of places we can go to price your loan and
Mhm.
make sure we're providing the most competitive offer out there.
Exactly. And the nice thing is some of these lenders have limits on how many of these you can do. Because we
Hmm.
have multiple lenders, we can go a lot farther in getting more options for you, because some lenders have a threshold of 5 deals or 5 million in exposure that they'll do with any
Yeah.
one borrower. So this helps them to get around that.
And then time to close from the moment that somebody applies for one of these loans compared to more conventional loan. Are we expecting around the same time frame?
No, so a fix and flip, your first one, we can usually do those in about 18 days.
Okay.
After you've done one with us, we can usually close in 11 or so. So
Okay.
they can close really quick after we've gotten all the initial paperwork, because we save all that, and that's a big chunk of the loan. The DSCR loans, it really is dependent on the appraisal, but if the appraisal is done quickly and we get it back quickly, 18 days, 15 days, 21 days.
Okay.
So
Pretty
there's a
quick.
lot, yeah, there's a lot less documents, so it makes the close a lot quicker.
Very cool. Very cool. Well, yeah, I think this covers a lot of information. I think this would be valuable for anybody that's either a seasoned investor or somebody that's looking like, hey, I've got some cash I'd like to put towards a fix and flip, or maybe get into my first rental. Very competitive products to allow you to go out there and easily get into that piece of real estate and get rolling.
Oh yeah, I mean the rates are pretty competitive when it comes to that, and what you're comparing the alternatives to.
Yeah.
Traditionally, like you said, 2, 3 years ago when rates were low, you would want to do an investment property through a conventional loan. Now you have to show all your income, and you're
Yeah.
qualifying just like you're qualifying on a primary purchase. Um, and nice things where you could put 15% down. You would have lower interest rates than what the DSCR was
Yep.
back then. But the problem is with the change in the market, there's not a lender out there that will really give you an approval for only 15% down on an investment property. You really have to go 20 or 30. 20.
Yeah. I don't know what happened here. Can you hear me? That's weird. And this is the silent part of our video. Okay. Well, we will wrap up. We'll pull some clips out of here.